Hello, and welcome back to Market Wake Up. My name's Jordan. This is John. You're in the one-stop shop to get up to date with everything you need to know in the Forex trading world. Today, we're actually going to share a little bit of our heartaches, John. I know I haven't prepared you for this, but I'm going to share a couple of beginner mistakes when getting into macro trading. And these are things that I can speak from personal experience. So without further ado, let's dive in. Welcome back, John. Welcome back. Happy Monday.
Happy
Monday. Did you have a good weekend? Are you ready for the week?
Yeah, I think so. I had a busy weekend. Like I said, I was saying to you before, like I was at my little nephew's party, and he's turning 4 now, so he was very, very energetic, running around a lot. He had a little mascot there as well, which he enjoyed, which was fun. But yeah, after that, he had a lot of energy. He had a lot of cake that was consumed, so he had a lot of sugar in him. So he was running around like a bit of a nutter. So it landed on my responsibility to look after him. It was fun. It was fun. But after that, I was like, I could do with a few hours, just to myself. But no, I feel prepared. Obviously, we had a lot of things going over this weekend as well, so I kind of had to really keep an eye on the market over the weekend just to see what was playing out. There was a lot of stuff in terms of you had the kind of crypto hack that happened over on the Bybit network, and then you've got German elections that were coming through as well. And then obviously it's just general volatility out of the US at the moment. So there's a lot to kind of be prepared for this week. So I've done quite a bit of research going into this week. But yeah, I've had a good weekend. How was yours?
Yeah, good, nice and relaxed. It's been a fun one this weekend. I have been watching the news, but not for good reason. China's been doing some live firing just off the coast of Sydney, which is really nice because that's a long way from home from them. It's near us. So they sent a cruiser, a refuel ship, and a frigate. All three of them just down the coast there, just on the border of international waters, and started doing some live firing drills. A couple of flights had to be diverted and all that fun stuff. So tensions have been high.
Yeah, I did not know that.
Yeah, we've been keeping up to date with that, seeing what's happening over there. If you haven't seen, the Oz 200 has been absolutely plummeting. The Australian stocks are not in a nice spot. They're going like this, and so it's been a funny one having a look across the market this weekend. But in terms of how it was personally, I quite enjoyed it. Put my feet up, had a beer, weather was nice. I can't complain.
Well, yeah. Well, I mean, when the weather's lovely, you can't, can you? I mean, over here it was raining, so I'll give you that one.
That's fair. But all right, you said you've done a lot of research over this weekend. I'm curious. What do you got for us?
Well, the German elections were probably the biggest thing that were going on over this weekend. Elections are funny, aren't they? Because I think a lot of this year, and especially towards the end of last year, everything's been more towards sort of like fiscal policy globally, not necessarily just in the US. The US have grabbed headlines because of who has come into power and how aggressive that person can be in terms of policies and negotiations. But I think in Europe, there's been a lot of political instability, right? You had kind of everything last year to do with kind of the French elections and sort of Macron being, quite interesting in terms of calling an election and then calling off an election. And then, so there was a lot of political instability in France. Then there was the sort of situation in Germany where they kind of dissolved government and whatnot and basically just went into full election mode and kind of lockdown mode there. But then you've got the thought now there is some political stability coming back into Europe. And usually when you get political stability, the currency can perform pretty well under those conditions. I take example, the UK. There was a lot of political instability until sort of the Labour government was confirmed. Once the Labour government was confirmed, the pound actually went on to rally for quite a few months after. So it was quite interesting to see kind of who won the majority of the votes. So obviously the CDU, who's run by Frederick Merz, they ended up winning the election but with a 28% vote. Now, I don't know if you've seen the parties over there, but then you've got the AFD, which are considered sort of far right, who have been backed by Elon Musk and JD Vance in the US. Which they actually had record results for them, winning 20% of the vote.
And that's concerning, right? Having billionaires not only be involved in the US government policy, but now using their influence for the leaders in Europe. That is another that's just sent the value of X double, because people have realized now, if I buy influence, I can get in government.
Exactly, and that is really scary, isn't it? And I mean, I don't think it's kind of obvious in a way, isn't it? At the same time, but it's still quite scary that somebody can just buy a social media company, have so much influence, and then people really actually buy into it. Like, it's quite funny, the reports on. I'm going to go into a rabbit hole now of like Elon Musk, but I don't see it personally, but he has a cult following, and I'm just going to leave it at that. but yeah, essentially, the problem with Germany is they have to form a coalition regardless. So previously I believe it was a 3-party coalition that obviously went to pot, and now they've got to do a coalition, but it's a 2-party coalition. So there's some positivity around the fact that it's only going to be a 2-party coalition. The AFD are not in the conversation of that coalition. It's actually the previous government, which is the SDP, I think that's the Social Democratic Party, and the CDU, who won, coming together, and they're going to create a coalition. But the leader, Frederick Merz, has made some quite interesting comments about the relationship between Europe and the US. So he very much wants to be Europe focused and make Europe stand up on their own 2 feet rather than relying on the US, which makes sense considering the fact that Donald Trump's come in power and then just basically started saying, we're going to tariff Europe, we're going to do X, Y, and Z. So I do feel that, that is a smart thing to kind of play on, especially if you wanted to create votes. So it'd be interesting to see how this impacts the euro going forward. In terms of euro going forward, there's been some interesting developments that I've seen, just from a point of positioning when it comes to sort of commitment of traders and things like that. They have increased long contracts quite considerably. They've decreased shorts, increased longs, and it's making me think, actually, is the euro dollar play to the upside one of good value right now? Which we'll talk about a little bit later. But I'm kind of looking at that market and thinking there might be something going on here, because the dollar's not performing well. The dollar, recent developments in terms of just general data coming out of the US, is not really beating any expectations. It's actually coming in below expectations. You've obviously got Elon Musk in power over there as well, doing Dodge, and they are cutting government spending considerably, and they're obviously booting out a lot of government workers, which makes up a lot of NFP. So we could start seeing actually NFP coming in lower in the next few months. And traders look at that NFP and go, well, that's coming in lower, let's sell dollars. So I'm feeling the US dollar downside at the moment. It's just whether I actually want to be involved with it. I'm kind of on the fence. I'm almost like my everything was telling me last week, get long euro dollar, get long Aussie dollar, pound US dollar, get long, and I didn't touch a single one of them. Because I'm still on the fence about this US dollar. There's an element of risk when it comes to the dollar for me, which is making me kind of sit on the sidelines a little bit when it comes to dollar pairs right now.
Tell me, John, do you make money sitting on the sidelines?
Well, no, but also there's no money at risk. So
yeah. No, if you want my opinion on euro, it was in Friday's newsletter. A little quick and dirty trade edition I did on the euro there. So if you want my opinion, make sure you guys hit the link below. You can see previous editions, so you can go through and have a look there. Moving into this week, it's actually a pretty quiet week compared to what we have had. Yes. It is quite a nice. Obviously, today's a bank holiday in Japan. Tomorrow, you're looking realistically at consumer confidence out of the US. There's nothing really to worry about. Then you've got Australian CPI, which is forecasted to come in at 2.6. I don't think there's going to be any major surprises there, to be honest. I think everything's pretty much priced in. G20 meetings could be interesting, but they have a track record of disappointing when it comes to volatility. And then you've got prelim GDP and Canadian GDP and actually no, Chinese manufacturing on Saturday. That's an interesting one. Late Friday night, Chinese manufacturing could be really interesting.
Yeah, absolutely. I think the notable standouts for me was the USCB confidence. Because we've seen a lot of things in terms of kind of like consumer sentiment being a little bit lower. So CB consumer confidence is going to be something I think we need to really take into consideration, especially where we saw stock markets at the end of last week. I don't know if you've seen them, but they are heavily down at the moment. Services PMI in the US was shocking last week. So all these kind of indicators are pointing at a little bit more downside to come. The only other US one I'm really interested in at the moment is core PCE. If that's going to remain a little bit sticky, what do the Fed do in terms of what happens in the US? I think there's a lot of pointing towards the Fed holding rates at the moment, and that's obviously something that the market's trying to price in. But we saw yields drive lower last week as well. So I think if we start to see core PCE come off and actually come below expectations, then I think that's again another bit of a fuel for maybe some dollar weakness in the short term. The only other ones that really catch my eye, sorry, George, Australia CPI, RBA came out last week, cut rates, really heavily talking about the fight against inflation is not where it needs to be right now. So what if that misses higher? That could be something that is interesting from a playbook point of view.
Yeah, it goes back to what we discussed last week. The data suggests we shouldn't cut rates.
Yeah.
Simply. The data just suggests, is there a little bit of politics going on? There's an election coming up. Maybe. But we shouldn't be cutting rates. But I think, as we've kind of touched on this last week, I think the reason they've done that is because everything else macro is not going in the favor of Australia right now, and the trajectory isn't great. So I think they're like, hey, we might get smacked from over there. If that all happens at once, we're in bad shape. Let's drop these as a precaution so we can bounce back fast. If we're wrong, we'll just take rates back up again.
Yeah.
And I think that's very much the approach there. So I don't see it as a genuine rate cut. I see it as a precautionary to what's happening in the macro world, which I like. Sure, I see the play. I actually, for one of the first times, agree with the RBA. I'm like, actually, I think that's a very smart decision. The bad news is everyone on the ground here is going, woo, rates coming down, let's go spend. And it's like, oh, no, this is not what this means. This is not how this works. There's a strategic angle here. And everyone's gone, no, the rates have been cut. It means I go get mortgage. And I'm like, yeah, sure. But so on the ground, I think spending is going to go through the roof. I had a quick look at the Fed Watch tool to get an idea on where the US rates are projected. 19th of March is the next rate decision. 97.5% chance sitting still. That's what the futures markets are saying at the moment. 7th of May, still a 72% chance of sitting still. 18th of June is when we get a majority share towards a cut, which is 25 basis points. That's a 60.5% chance of an ease. 47.6% are saying it's 25 basis points. 12% are saying it's 50 basis points, but I don't think it's. I think they're going to be sticking around probably until July, personally.
Yeah, I think they're projected to do 2 cuts this year at some point, aren't they? So it makes sense that they'd leave it a little bit later in the year. It's just obviously data dependent, isn't it? And I think what's quite telling at the moment is really what consumers are doing. They're obviously very worried about what's going on. Whether that is fiscal as well. So there is that. I know you can look at sort of like consumer surveys and be a bit like, well, what do they almost like what do they know? But they are everything in my world. They are the people that are going out there, are the ones that are spending money. So if they're the ones that are then going to start thinking about spending less to accumulate essentially, so that in case of sort of future money worries, then that's going to have a real big impact on earnings on companies. That's going to have a real impact on sort of the likes of inflation going forward. So, could the US actually be heading a little bit for deflation? That's something that we've got to consider. I don't think that's on the cards anytime soon, but it could. But
it's on the cards.
It's on the cards, yeah. It has to be there. Because if you look at oil prices as well, they are actually continuing lower. So Trump's kind of getting what he wants right now.
Yep. Will it last?
Well, that is the big question.
Will it last? Who's willing to bet against the crowd there? Because I don't think I am. Let's talk about the topic I wanted to today. Beginner mistakes that people get when getting into macro trading. Now, macro trading, I think, scares a lot of people because of the lack of. I think technical analysis attracts a lot of people because you can see it, you can understand it. If then do this kind of stuff. Whereas macro trading is more based on opinions and outcomes. The reason I say opinions and outcomes is because, yes, economics has a if-then effect. If jobs fall through the roof, you've got a problem, right? Of course. The problem is everyone's ahead of you. So you need to be predicting that this will happen early on. You need to gamble on that. And that's where you make money in macro trading. So I wanted to touch on a few of the errors I made getting into this, ask some of the errors you made, John, when getting into this, and hopefully help someone avoid it. Now, there's one that stands out as the biggest problem that I still to this day sometimes face. Bias. By far bias. It's getting in, drawing some analysis, because you can draw logic. You can't do this in technical analysis. You don't draw logic. You just draw. Macro trading, you draw a logical reason behind a trade, and it can be so addicting to just stick by that reason and not know when you're wrong, and not sometimes be right, but the outcome not be the way you expect it. Have you dealt with bias before, John?
Oh yeah, last year I can point on. I know the trade. So I was short pound Swiss.
Yeah, I got one too.
Yeah, so I was short pound Swiss. And the bias I took from this, it wasn't necessarily macro driven, it was more sentiment driven, but there was a little bit of macro behind it as well. But I'm pretty sure this was the time where the UK, it was all these sort of election calls and things like that. So there was a lot of volatility in the UK. Hedge funds were buying pounds at levels we hadn't seen for like 2 years. So usually that is a big alert to me that there could be a reversal. Then there was the opposite on the Swiss franc. So I was like, pound Swiss could be a really good market to get short. I got short, made a decent return on the way down. But then I started to sell every pullback that was going on, because my bias in my head was, this could still play out. This could be a bigger move than what's actually. But looking back, it was a sort of silly thing to do, and I ended up being sort of break even in the end on the whole move, because I was so stuck in that bias of that's going to play out. But what I didn't realize is that the average move that had happened from the original move was like 4 times what usually happens in that move. So I was probably just egging it on a little bit to be like, yeah, this is right, this is going down. And to be honest, at that point, I just got whacked.
Slapping mayo.
Yeah.
That's what I call it, lathering mayo to make it make sense. And that's one of the hardest things, making it make sense. Because if you want to make it make sense, you can. And no one's going to tell you not, because you're in a room by yourself making these trading decisions. No one's going to sit there and go, you're an idiot. You're going to back it and you're going to trade. Silver last year. You'll remember there was that the analysis played out. As I said, it worked. You made money on it. I didn't, because I just kept getting it the wrong spot. But I held it for too long. Too long. It's just one of those things you need to understand. And there was one other one that really stood out to me too. I could talk about this all day. If you have questions, now's your chance. Get in the chat and ask questions if you're getting into this. News. Not economic releases, headlines.
Yeah.
Right. Proper old school news headlines. Extremely biased. Like phenomenally biased. If you read into them, you can find a trade, you can execute on that trade. It will not work because most of the time the news is fluff. They just say things that make sense for them and will make it make sense for you. And secondly, if it's in the media, it's the move's gone, the trade's gone. So while we say we're macro traders and we trade the news and things like that, we're not trading the Wall Street Journal headline. We're not trading, CNBC breaking news. That's not what we look at. If it's in the media out there, the move's probably already happened or it's gone, or it's going to be a very biased story.
Yeah, absolutely. There's a number of those that you can see every day. So, yeah, it's that is kind of hard, isn't it? Because I think when you say you trade the news, I don't trade the news directly. Or a lot of the times the news comes out or a headline will pop out of somewhere and a market will move and there'll be like a big reaction on it. And I think as traders, then you get that kind of FOMO, thinking you've missed out on something that you should have been knowledgeable of. And that can be a sort of way of trying to get into something. I've been guilty of that so often, especially like when I first started, because I'm technically a self-learned trader. I've done everything on my own. I am a self-taught macro trader. I thought that there was more to the market than just technicals, and I was like, I want to dive into this. I want to get into, I want to be ahead of the move essentially before it happens. So yeah, for me, when it came to kind of like trading the news, it's not necessarily about trading headlines. It's about trying to find those sort of key indicators that markets should move on, and then try and build a bias off of that. But at the same time, when you've got sort of political sort of stuff going on, it makes it very difficult. Difficult because you've got to also understand the flow of the market and understand what is actually the market moving on.
That's it. You need to see what traders and investors care about, not what's happening. What do people care about? That's the beauty in analyzing the moves from economic releases.
Yeah.
We've talked about this plenty of times. 5 years ago, no one knew what CPI was. It was an orange folder. No one cared about it, right? We got into inflation territory and it became the most prominent thing. And now every person in the world knows what an interest rate is. No one did before. If you know what investors care about, then you can get ahead of them going, this is going to impact them. There's a 30% chance of this happening. Well, it might be worth a little bit of risk. This is going to happen. Hard. But I cannot agree with you more there. You need to know what investors and traders care about.
Absolutely. And there's a really easy way you can do it as well. Like, just make a note of what's happened in the day, right? Look at the news release. Look at the movement that's happened. Like, there was a really good example last week. I think we had inflation data out somewhere last week. I can't remember where it was now. Might have been some US. Oh, it was US GDP data, right, on Thursday. No, that's this week. What was it? I need to go back to my notes here. What was it now? Oh, FOMC meeting minutes. Like, did you even know that happened last week? Because
last week was a bit of a hectic week.
Yeah, it was like the market didn't even budge on it. Like, I was looking at the FOMC meeting minutes. There was some kind of talk about sort of future interest rates and things like that. Market did not even budge on it because it's so focused on the consumer at the moment and the data that's coming out of like retail sales in particular, services, PMIs, things like that. The market is so focused on that, it ignores FOMC. Now, as a trader, you might have been sitting there going, oh, FOMC meeting minutes are coming up. I'm going to adjust my positions or da-da-da-da-da. But the fact was the market didn't care about that at that time. And that's why it's really interesting, trying to trade macro, because I think, and we've talked about this in the past, the economic calendar is probably the most misleading indicator ever. You've got like the yellow folder. So a trader will go, oh, it's only yellow folder news. It shouldn't do anything. That's not true. That is not true. You know, me and Jordan have talked about it in the past. Maybe we should make our own economic indicator.
I honestly, that's going through my head right now because I look at some of these and we have in the past. I've looked at it and I've gone, how is this been marked orange? Like this is going to be the most, and lo and behold, woof, the charts go nuts, and everyone goes, "Oh my god, this wasn't on my calendar. I just ticked red news." And I'm like, "Yeah, because you're relying on an algorithm to tell you what's going to be impactful, not an analyst." So yeah, maybe we should have a market wake up analyst calendar to tell you what really matters and what doesn't. Like even looking ahead this week, G20 meetings. A lot of people think, "Whoa, this is going to move." Like I can tell you now, the last like 6 G20 meetings have been pathetic.
Yeah. I don't think I've ever looked at a G20 meeting and gone, "Oh yeah, this is great. This is going to move markets," or anything like that.
If Oz CPI comes in flat, like expected, you're not going to see a change in the Aussie dollar. It's like you have to really miss to the upside, in my opinion, to get a move on the Aussie dollar there with CPI.
Yeah,
but like
that one is interesting because and this is where I try and find out what's important for the week is, you know, you can go onto the central bank's websites and watch their latest reports. You can read their latest sort of newsletters, or you can read or you can watch the videos of the press conferences and things like that, which I think you should really, really consider doing. If you get time to be able to do it, you should, because they tell you exactly what they're looking at. So, and that is exactly where you should be focusing in terms of that data. You know, the Bank of Japan have talked heavily about inflation. You've got Tokyo Core CPI coming up this week. That's going to be a mover for the Japanese yen. You know, so I think for me, you know, the calendar, the misleading calendar, is one of the biggest ones, because I used to sit there. I remember the first thing you're told about macro trading. Now, I don't know if this is the same for you. Is non-farm payroll is the biggest sort of number that you should look for, right? And arguably yes, because jobs are so important in the US, right? But obviously, so basically, what happened to me was there was this whole build-up on like Bloomberg for the entire week that jobs numbers are forecast to be the best they've ever been in history or whatever. And I was like, yes, this sounds like money-making territory for me. The little retail trader sitting in my mom and dad's lounge with my laptop open, you know. And I was like, I'm gonna basically buy dollar yen, and I basically put a buy entry above the hourly highs, stop loss below the lows. It turned out to be the worst jobs data instead of like 11 years or something. And I was like, oh, and dollar yen just went boom, straight to the downside. And I was like, oh, fantastic. And because the volatility increased at the time, it actually put me in the trade on spread and then took me out within seconds. And I was like, what the hell just happened? So yeah, that was quite a funny moment. And then I've never traded NFB since.
Never dabbled ever since that.
Never touched it. And if anybody, so obviously when I was first getting into it, everyone wanted to know about it, and they'd be like, oh, I've heard about NFP, like, you know, I've seen a guy and he's making loads of NFP. I'd just be like, nah, rubbish. You can never predict that. You can never predict it, so don't even bother.
Yeah, the reaction is not what the data suggests.
No.
It's that's why I was quite amazed when we did that webinar and Giles Tracy.
Oh yeah, I was talking about.
I was like, wow. I was like, impressive. That's a ballsy move. It's a very ballsy move.
Yeah, I almost like the fact where he was looking at the average like move of those, and then I was thinking more on the side of, oh, okay, I could fade that, because I ain't getting in the initial move. I'll tell you that. No chance. No chance.
You gotta take it to go for us today.
Yeah, potentially. I'm going to share my screen actually. There's a few things that I've been looking into recently. The best one I think for me, well, we've got to talk about the Japanese yen, right? Because it's market wake up. We talk about Japanese yen every time. The Japanese yen has been really profitable for me for the past few weeks. I must admit, I have now shorted Swiss yen 3-4 times now. And they've done really, really well for me. What I found very interesting though is where the Japanese government bond yields are right now. They are trading significantly higher than where they are supposed to be trading around. Essentially, now Japanese government bond yields are kind of free floating now. They used to cap it at certain levels. So when it got to certain levels, you could almost sort of guarantee that the yen strength would come into the market because there could be kind of like some intervention around those points. But there's actually been quite a bit of a sort of kind of negative correlation between the government bond yields at the moment and dollar yen. So dollar yen is the purple line that you're seeing on the chart here. If I just turn the government bond yields to yellow, usually you see quite a positive correlation between the two. So usually when Japanese government bond yields are rallying, there's that rally in dollar yen. When we're starting to see those come off, you've got dollar yen coming off. Obviously, these are intervention points in the market. But we're seeing that absolute, like this negative correlation at the moment, which is quite interesting to me. I don't know whether that means there is a potential for dollar yen to kind of spike back to the upside or what, but this would be in a territory for me where you would almost expect the well, we are expecting the Bank of Japan to start hiking interest rates, right? And that's what's quite different about this whole kind of rhetoric, because throughout these kind of moments here, there was just no sort of mention of hiking rates really from the Bank of Japan. They did go 25 basis points, but it was almost like it's 25 basis points and it's done sort of thing. Now that rhetoric is kind of completely changed. There is almost like, okay, we are going to continue to hike rates if we do start to see inflation growth and things like that. So government bond yields are going higher, and I actually think it's having a negative effect here on dollar yen at the minute. Japanese yen, one of the strongest currencies to note right now. Like I've said sort of previously, Swiss yen for me makes the most sense in the market. Swiss yen, obviously a very strong correlation with US dollar yen, but any kind of sort of rally that we've been having in this market, I have just been shorting. So these kind of pullbacks that have been happening in the market, I've just been waiting for every kind of turning point on lower time frames. I've been pretty much short from this area up in here. And now we've come to quite a significant point. It's 166. What I'm interested in now is, can we get beyond this point though? You know, it's all well and good being like, you know, we've got the sort of fundamental factors here that are driving prices lower. You got Swiss National Bank cutting interest rates, potentially going negative. Japanese yen or Bank of Japan potentially hiking and going much further than what was initially anticipated, driving that Japanese yen strength. So I'm looking for any kind of retracement back into sort of the 169s. I like for further shorting ideas. If we can break 166, I think this opens up a big door to the downside, because this has been the performance of the currency pair since 2021. And I think if we break this could mean some significant downside for the pair. So this is probably my pair of the year right now. So that's
Can you invert that chart?
Can I invert it?
Yeah.
Invert the scale. How do I do that? There we go. Invert scale.
Tell me that's not euro US dollar.
Well, yeah, absolutely. Yeah, it is euro.
Overlay the euro on that.
Oh, sorry. Let me go back.
You're on the weekly, are you?
Yeah, I'm on the weekly. Yeah.
Yeah. Never mind.
I have to invert euro, but yeah, I can see what you're saying. It's like a lot of dollar pairs right now, isn't it? A dollar's very correlated.
But that's Swiss yen. That's what's fascinating.
Yeah. So yeah, be interesting to see. Yeah, maybe we can do a chart for that in the newsletter this week. That'd be an
correlation. I love correlation. Well, you know, we both love correlation hunting. We'll sit here with about 19 different charts on one chart and being like, look, I found a dot. It's dangerous. But no, I love it. I like it. I think euro has potential to go upside. I can see that correlation with the yields is an interesting one. Negative correlation, should I said. I've not noticed that, and that is a thought-provoking one.
Yeah. So definitely want to go forward with. But I just think the Japanese yen is probably the most. It's the most clear cut I've seen at the moment. The only thing that's kind of putting me off this week is the fact that when I go over to the commitment of trader reports, the 52-week high in terms of long contracts are 66,000. We've now increased to 60,569 contracts on the yen. So this would be in a territory for me where I'd start thinking about maybe hedge funds will start taking a few profits on those moves. So that's why I'm looking for Swiss yen to maybe kind of pop back up to sort of the 169s, 170 at the moment. But for me right now, I think the yen, we did a video on it earlier in the year that the yen could be the best performing currency of 2025. It's kind of playing out right now.
I like it. I like it, guys. There's another Monday of Market Wake Up. Tomorrow we'll have another video. Thursday we'll have another video. Friday we'll have another email. So if you're not sick of us yet, what are you doing? Get in here so you can get sick of us and we can give you all of our crazy and absurd ideas, but hopefully teach you something along the way. Thank you so much for joining us, John. Thank you for bringing your analysis once again.
Thank you.
Guys, we'll see you soon. Cheers.
Peace.